How to become a crypto trader. While cryptocurrency is edging closer to becoming a mainstream focus of the financial world, now is a great time to determine the steps needed regarding how to become a crypto trader. If you have some previous experience in trading the markets, whichever instruments those may be, you are already one step ahead. Many of the standard trading guidelines apply. However, given the vast amount of volatility and hence risk involved in trading crypto CFDs, you must approach your trading strategy and risk management accordingly. What separates a successful crypto trader from the rest? More importantly, how can you set yourself up today to become the best crypto trader possible? Find out in this guide on how to become a crypto trader. What is a crypto trader? From a basic standpoint, defining what is a crypto trader is fairly simple. A crypto trader has the ultimate goal of profiting from short-term changes in cryptocurrency market prices. A crypto trader can focus on only one coin and pairing, like the infamous Bitcoin pairings, CUST, or BSR. Or, they may focus on multiple major coins and hence pairings, like Bitcoin and Ethereum paired with either USD or EUR. You may have heard the terms alts, which means alternative cryptocurrencies and are usually considered smaller, with a market capitalization to represent that. Some crypto traders may focus only on alts, and not bother to train the main cryptocurrencies at all. None of the above scenarios are wrong, however it is a matter of determining what is the right strategy for you, your risk tolerance, and your overall goals. It is crucial to quickly overview the two scenarios you must consider when investigating how to become a crypto trader. Option 1. Buy and sell crypto on the exchange. It is absolutely a viable option to buy the cryptocurrency of your choice directly from a crypto exchange, which means you actually own the underlying asset of the cryptocurrency. There are certainly advantages to this option. However, those advantages are more relevant to when you want to hold the cryptocurrency for the long term, not short-term trading. Buying and storing cryptocurrency directly on an exchange can be risky, as these exchanges can be hacked, are often, not always, unregulated, and will incur fees when you both buy and sell, fees to the exchange. Using this option, the trader will need to put up the full value of the position and then store the cryptocurrency in a secure wallet until they are ready to sell them at a profit or loss. It is never recommended to store crypto directly in the exchange. Another reason why this option is suited for a long-term strategy. This option is much like an investor buying a physical asset like shares of a publicly traded company and holding them long-term in the hope that they will appreciate in value. With cryptocurrencies, however, the volatility of price over the long term is why many traders or investors prefer to short-term trade, compared to long-term invest. For example, the chart below shows the volatile hourly chart of Bitcoin versus the US dollar, CUST. Option 2. Trade crypto CFDs. Your secondary option is to trade cryptocurrency CFDs with a regulated broker. This option is more ideal when your strategy is short-term, which is really the only viable option for trading, in the first place. This type of crypto CFD trader can use leverage, meaning they only need to put up a small deposit of the full value of the position. You can learn more about the benefits and risks of leverage in the What is Leverage in Trading? article. Crypto CFD traders also have the benefit of shorting or selling cryptocurrency CFDs, meaning they could also profit from a falling market. Considering the uptrends and downtrends in the Bitcoin versus US dollar chart above, using CFDs could prove to be a successful strategy. Of course, there are also cons which come with CFD trading of any kind. General and quick market changes pose a risk to your capital and must be monitored. Liquidity risks also must be considered with CFD trading, as market conditions can change quickly and existing contracts can become illiquid. A valid first approach is always trying out the markets with a demo account. Crypto CFD traders can test their trading ideas and theories in a risk-free virtual trading environment by using a demo trading account. This means they can place trades on different cryptocurrency CFDs without using real capital. Is crypto trading profitable? Trading cryptocurrency CFDs comes with risk, as any trading instruments do, considering the high volatility which is constant in this market sector. However, if you have a well-designed trading strategy aligned, trading cryptocurrency CFDs can be very profitable. As the expression goes, high risk can merit high reward. The statistics speak for themselves. So far in 2021, Bitcoin has outperformed every other asset on the market, making it the best performing asset of 2021. If you are prepared to do your homework, create a valid strategy, and understand what tools can help you succeed, there is a chance you can become successful as a crypto CFD trader. How much do crypto traders make? Naturally, it is difficult to speculate exactly how much full or part-time crypto traders make in profit. Many individuals who trade crypto CFDs do so in order to grow their portfolio and reinvest the profit into their next moves. This meaning, many crypto CFD traders may not be trading crypto as an actual job. That said, there is certainly a growing trend of people, millennials especially, quitting their jobs to trade crypto. Unfortunately, at this time there simply isn't enough data made publicly available to give you a realistic salary range of full-time crypto traders. The basics on how to become a crypto trader. Success as a crypto trader will mean something different for each individual trader. For some, it could be making a profit on a live account trading from the 30-minute chart. For others, it could be making a profit from shorting cryptocurrency CFDs. Ultimately though, success will come down to making a profitable return on the capital you risk. As with any business, the tools and information you use will have the most determinant impact on your overall success. Below we list the basics which you must take note of in order to increase your chances of long-term success as a crypto trader. Choose the right broker. In order to have the possibility to trade cryptocurrency CFDs, you first need a broker in order to conduct the trades, naturally and to no surprise. Choosing the right broker can be challenging, as there are many options and they all want your business. Most importantly, you want to make sure they are regulated, ideally regulated by multiple jurisdictions. Security and safety are all of high importance, which is guaranteed by regulatory oversight from the various regulatory bodies. It is always recommended to check the broker's reviews on Trustpilot. You can see our rating and user reviews here. It is notable to mention that Admirals offers a negative balance protection policy which will protect you from adverse movements in the market, by preventing your account balance from falling below zero. This is a huge advantage when trading a volatile market such as cryptocurrency CFDs. Choose a reliable trading platform. Your trading and charting platform helps you to view historical price charts of the instrument you are trading, as well as provide you with the order tickets you need to place and manage your trades. Some people may have a charting platform that is separate from their brokerage platform, with new and advanced trading technology. However, you can have your charting platform and brokerage platform all in one place with the MetaTrader suite of products. Choose your crypto trading strategy. Trading is all about making decisions on whether to buy, sell or stay flat on a particular market. The traders who are successful over a consistent period of time are much more likely to use a trading strategy or methodology to aid in their decision-making process. Trading strategies are used to help streamline the process of information, which may include when and when not to trade, what timeframes to focus on, what technical indicators to use, how to enter and exit, and so on. Of course, the tools you use will depend on your chosen style of trading. This is the first thing to establish when learning how to be a crypto trader. After all, if your goal is to day trade cryptocurrency CFDs from the hourly chart, which involves buying and selling multiples throughout the day for short-term profits and closing out positions at the end of the day, then using the long-term weekly chart for analysis may not prove to be very useful. Trading styles generally incorporate one or both of the following types of analysis. Technical analysis. This type of analysis involves analyzing the movement of cryptocurrency prices to identify patterns of repeatable behavior. Many traders will also use technical indicators on their chosen cryptocurrency to find clues on which price levels the market could turn. You can learn more about technical analysis in our Introduction to Technical Analysis. Fundamental analysis. This involves analyzing news announcements related to cryptocurrencies, such as new developments and uses in the technology that underpins cryptocurrencies called blockchain. Focus on risk relative to reward. Trading is about probabilities as it involves both winning and losing. Risk management is a key principle in not only becoming a successful crypto trader but remaining there. For example, using a stop loss is one way to protect yourself against large losses. We hope you enjoyed the video. Tell us what you think about the video in the comments section below. Also, make sure to subscribe to our channel and click the bell button to get updates when we post new videos. Thanks for watching.